Hello there, I'm Andrew McCord, and welcome into Stockbusters on TaipanFinancialNews.com. Now, just a few days ago, we witnessed a pretty dramatic drop in the market, with the Dow Jones Industrial Average losing a miserable 414 points. It was a harsh reminder that the market is officially entering into the traditional summer doldrums. In fact, 5 of the last 9 summers saw an average 5% market drop between June and September. So with that in mind, today we're asking WaveStrength Options Weekly Chief Market Analyst Adam Lass for suggestions on how to defend your bottom line against this sort of seasonal hit. Adam, thanks for joining us.
Thanks for having me, Andrew.
Now, you've been throwing out warning signs on a summer slump for a while now. So now that it's here, what are you suggesting investors do?
Andrew, whether you see this as a seasonal summer doldrums, an economic slump, or a necessary technical retracement, a marked drop is indeed in the cards. Economically, energy costs are robbing average folks blind, and they don't have an endless source of cash flow in the form of skyrocketing home equity to bail them out anymore. As a result, growth has come to a virtual standstill.
Okay, now Adam, I've heard that this is the very reason the Fed is going to step in shortly with some rate relief. Is that the case?
Well, I don't think so. Had Bernanke continued with Greenspan's rate hikes, the dollar would be stronger, imported oil would be cheaper, inflation would be under control, and the Fed would now be in a position to stimulate the economy with a rate drop. Instead, the central bank's reckless habits over the past few years have left it with no viable tools left to help get the economy restarted.
All right, well, that's a pretty depressing picture you're painting, but clear something up for me. Are you saying that Bernanke's rate policy has allowed companies to actually buy back billions in shares and has therefore created a shortage in the face of some pretty constant demand?
The Fed has been bookended by 2 bad choices now, and it's chosen to do nothing. And so far, the market has loved this paralysis, setting new high after new high as CEOs use relatively cheap debt to buy back billions in shares. And this is improving this quarter's report at the expense of any real future growth.
Okay, so there's no doubt you're obviously bearish here. So what's Adam Lass's game plan for the dog days of summer we've still got ahead of us?
Now, for that, I look to the financial stocks, who are, after all, the best canary when you're concerned about a potential disaster in an economic coal mine. But there's a problem when you break open this particular list. The definition of financial institution is really rather broad. It holds both real old-school banks with tellers and clients, and it also holds hardcore players like Goldman and Morgan and Merrill.
Do you have a problem dealing with the big brokerage houses?
And quite frankly, I've found over the years that I simply cannot trust the brokerage houses not to take some rather peculiar positions across from us on the option trading floor that end up costing us big time. In fact, this hard-won lesson is etched on a placard in my office that reads, "Thou shalt not trade investment banks, as they are evil guys who will get you every time." Fortunately, we need not go there, as we have a perfect candidate in the form of a real bank. Indeed, Bank of America is the second largest component of the Spider's financial.
Well, where do you see Bank of America heading this summer?
Well, Bank of America is offering up a clear cyclic sell signal right now, with price dipping below the 11-week average, accompanied by negative readings on the money flow oscillator, which takes into account both price change and volume. Position-wise, share price is shifting at this very moment from a shallow falling trend to an even steeper falling trend. A drop to the bottom of the first trend would take shares down to 46.57 over the next 4 to 8 weeks. This time span and price drop coincides very neatly with the market's broad tendency to peel off 5% or so over the summer months. However, this is only the beginning. As for that steeper falling trend, a drop to its bottom line, the new trend would indicate deeper economic troubles and would yield 41.13 over 8 to 16 weeks.
Adam, we've got about 30 seconds left. Tell me, what would you have investors do right now?
Well, losing Bank of America immediately will protect against an 11% loss at a minimum over the next few weeks.
How about traders?
Well, they would want to look to midterm dated puts. Proper selection here could net a clean double off the same move.
And how can we learn more about this sort of trading, Adam?
Well, a great place to start is always WaveStrength.com. My whole team produces free daily commentary there in WaveStrength Market Report. And you can find out just which Bank of America put we selected for our WOW readers.
Adam Lass, thanks for joining us. You can read and hear more from Adam, as well as sign up for his free daily e-letter, WaveStrength Market Report, right here on TaipanFinancialNews.com. Thanks for watching. Until next time, keep your portfolio safe.